Hey everybody, this is the Chinchilla Pickin' Podcast. This is David Underwood. I'm here with Brandon Beaver. We hope to be entertaining, educational, and uplifting because we want everyone to make money. It is Thursday, June 25th, 2021. Brandon, how are you doing tonight?
I'm good. How about you?
I am actually a little stuffy. I've had allergies killing me all week. I don't know what it is. I'm finally starting to grow plants, so maybe I'm outside more and trying to lose weight and feel great again. You know, every summer we try this, and hopefully this summer's going to stick, and we can do better with it. But that's how I'm feeling right now, a little stuffed up from allergies.
Yeah, me too. Also, I got a spider bite, which is why we're a day behind. Likely a brown recluse. It was pretty mean. I woke up Monday with what looked like it was a third nipple on my arm, and then that was weird, but then Tuesday my hands started going numb and I could feel my heart pulsing through the vein that's right next to my bite. And then it started looking really, really nasty, so I decided to go to the doctor. I got it drained, got 2 antibiotics, and I seem to be doing better now.
Nice.
Only me. That could only happen to me. And then I'm coming into my house today, on my porch, on my hand, drops a black widow spider, which I'm familiar with. Thankfully, it didn't bite me. I'm pretty certain it was a male spider because it had white markings on it, and I think that's the markings of a male, and they usually don't bite. But still, black widows are pretty mean, too.
Are you on the set of Arachnophobia?
You would think so.
Seriously. I mean, That's what it looks like it's going on there, Brandon. Brandon, you guys stay away.
I was trying to turn into Spider-Man. Didn't work.
Spider Universe. The Beaver. Here we go. All right, guys. Rules. Here's the rules. Every week's the same. Brandon and I get together about 5 to 10 minutes before the show. We tell each other what we're going to talk about, but we don't discuss it. We save that so you can hear the live discussion right here on the show. Brandon, I like your topics better. We're going to go with you first. We're going to let you start it off. We're going to save mine for the end.
Okay. So here's the thing. I'm contrarian, I've mentioned that before, in my investing and in my trading. And oftentimes at the very beginning of these trades or investments, you're buying something that has been priced down. And for a reason. There's uncertainties. There's uncertainties everywhere, but there's extra uncertainties in these stocks. So at the beginning it can be kind of painful. Monday was slightly painful. But the past few days have been vindicated. So, Jeffries for the week. We made this call last week. We said to buy it. For the week, it's up 9%. BIDU, we called that last week too, 9.79%. So, Dave, we've almost doubled your 5% rule here. It is possible.
So here's my question, and I've been waiting for us to start recording to ask you, did you sell your position?
I trimmed. You know, but I've got reasons.
I am grimacing at that.
I've got reasons. Price-to-earnings ratio on Jeffries is still low. The close today for these stocks, almost all the China stocks. I mean, Alibaba, you look at the last 15 minutes, it was like, see you later. I don't know what happened there, but somebody jumped in and bought a ton of shares and then shot the thing up a couple percentage points in the last 15 minutes. That was fun. But the reason for Baidu is that strong close. Actually, I just want to verify this, that I'm not mixing this up with another stock here. Hold on one second. Okay, so it pushed it right above the Keltner band and the Bollinger Band, the top Keltner and top Keltner Band and the top Bollinger Band. This is indicating a potential trend reversal to the upside, and this could send the stock maybe even to 220. The next step on this resistance level, if we get a close above 202 on Monday, we should be heading to 207, and then we can maybe even have clear path to 220. That's why I stuck with it. I did trim Okay, because when you get these kind of returns, it's time to ring the register a little bit.
It is. I mean, you know me, 5%, I'm out. I'm done. I'm moving on.
Yeah, but listen, this thing was so undervalued. Alibaba too. Same thing with Alibaba. 10 cents still undervalued in my opinion. There's a possible long runway to go.
Where's 10 cent at right now?
Right now, 10 cent is at 77.77.
Yeah, they do have more room to run. I remember calling them, thinking that they're going to go above 80.
Yeah, they generally, like in the past 3 months, they've stayed nicely above 80. They'll bounce into the 70s and they'll go back into the 80s. I honestly think this is a $100 stock personally. That's not overvaluing it at all. Right now, the PE ratio for this is only 26.86%. It can easily go into the mid-30s. Now, there is another possibility here. There's a possibility with this market. I mean, the last few days, nobody's cared about inflation anymore. We're setting new highs on the S&P. We're setting new highs on the QQQ and the NASDAQ. The Dow's pushing up against its old highs. Listen, we could be in a Goldilocks rally right now.
See, all right. So why are we not looking at inflation anymore? Why is that not an issue?
Because I think investors are looking at the 10-year yield and thinking it's justification to jump into tech and into risk assets again. And
that's exactly what the Fed is trying to get you to do with them buying bonds and keeping the yields low.
Mm-hmm.
So they're accomplishing their goal, but they're accomplishing their goal by jumping up inflation.
Yep.
And they're still buying billions of mortgages each month. They have not stopped that. And every week I get on this show and I rail about them buying mortgages. We can't allow the federal government to do that.
No, it's got to stop. It's all fake. It's false. You know, these are false signals that are being sent to the economy. But it could take a very long time for the stock market to catch on. I mean, it could be years.
Yeah, for society to do what it does when they realize that the Fed's holding all this paper and it's not worth what it's meant to be. Yes, you have to have some safe money. You can't be fully invested into high volatility stocks, i.e. GameStop, AMC, because once everything starts dropping, those people who are holding that have paper hands, and they're just going to crumble right away.
Yeah. Now, with that being said, it was funny because a couple days ago, BlackRock issued a statement and said that it was not time to buy Chinese stocks. The regulatory risks remain, and they do, right? But you can't say that the Chinese stocks, that the regulatory risks are there and you can't buy those, but then turn around and then say it's okay to buy Facebook and Google. Right?
Exactly,
because the regulatory risks exist for them too, and they're not going away. They're going to be here probably forever. They're always going to be there. There's always going to be that uncertainty. It just so happens that right now the best value is in China.
Yeah, no, I agree. And Google is always going to be in antitrust court in the U.S. somewhere.
And
They're
Europe.
always going to be in antitrust court, yes. And in Europe. And Facebook's always going to be going to Capitol Hill once every 3 months to testify about something.
Yep. So
that's the way it's going to be right now.
This kind of brings me to my next point. I'm starting to think that retail investors, even the ones that got involved last year, are starting to see how the market works and starting to learn from it. You're playing sometimes against some big money. But the big money, just because somebody's got a lot of money, it doesn't make them super intelligent, okay? A hedge fund failure rate would not be that high if it was the case. I mean, think about all of the tools and all of the resources that these people have that we don't have, yet they struggle to make 12%, and they fail more than half the time.
It's crazy. It's crazy because you would think if you could sit there and I could just say message Brandon behind the scenes in the trading platforms they use, which aren't the same. We're not all on the same platform. If I go to my Robinhood app and I put a trade in, it's not being done on the same platform that theirs is being done. Theirs is being done through messages to messages. I can message Brandon and say, hey, I'll take 1 million shares of Goldman Sachs. You got it to sell? Yeah, I got it to sell. Buy it for this price. Boom, done. It never shows up on the open market where we all trade,
right?
Where the retail investor trades. And so it doesn't show up in the stock price movements. It doesn't affect the stock price like it should. That 1 million shares just traded hands. That should affect the price.
Right.
It should be calculated in that. And not all the time it is. So they have that way ahead of us. The second advantage they have over us is the fact that they get news faster than we do. They get all these tips and hints and tricks. Some of these hedge funders have been caught red-handed paying for that extra phone call 5 minutes ahead of time before news breaks. You know, they'll pay someone, tens of thousands of dollars. Hey, man, call me right before they release that. And they do that, and they get these news. And these hedge funds still can't do what we can do.
Right.
If you learn and put the patience in and research and take your time and do it the right way, you could beat these hedge funds.
Yeah. Well, look, they've got the emotional maturity of an alcoholic 3-year-old. Okay? The FOMC had their meeting last week. Right after that, on Friday, they sold a ton of stocks. A ton of them, okay? Hedge funds unloaded their massive positions in value stocks after the FOMC, and nobody else but retail wanted in. I believe it was on CNBC that I took that note from. But it was interesting because on Friday, as the hedge funds were unloading their positions and panicking because, oh my gosh, they're going to raise rates in the next 2 years.
Great. Let them.
Yeah, they should. They should. I agree. But 2 years. But retail investors jumped in and they bought more stocks on Friday than any other time on record. And that goes into, I said this on Instagram the other day. They zig, you zag. It's the only way to beat it. You know, you can make good money momentum trading. You can do that, but the only way to really beat the market if you're just trading stocks and not options, and you're not trading penny stocks, the only way to beat the market is to do the opposite of what a lot of other people are doing when the situation calls for it.
Yeah, exactly. You see this time and time again throughout history, throughout the stock market. The people who make really good returns are the ones who see the error in the crowd. The crowd's going this way, and they see, hey, you know what? I need to head that way because that's the right way.
And it takes a lot of work. It takes a lot of work, and sometimes that work is really boring. Sometimes it's pouring through income statements and balance sheets and cash flows and earnings statements and listening to earnings calls and things like that because you're trying to find something that other people aren't thinking about.
Yep, you're trying to find what that CEO said in the earnings call about their particular product that, other people didn't catch on to or something.
Yeah.
You're listening for that extra thing.
But I got into an argument with a guy on StockTwits today, which you've told me not to do before. But this guy was like, oh, these hedge funds, they control $1 trillion. And like, oh, yeah, they're so big. Okay, just because they have a lot of money, it does not make them intelligent. That's a fallacy. That's not what... Okay, people, they can control the market because they have a lot of money. That doesn't mean that it's not easy to play them. And it's sad because a lot of these people think they're very intelligent because they're rich. They may be very intelligent, but the emotional intelligence is what matters in the market.
Yeah, and I definitely agree with you to a point. You have to be disciplined. You have to be strong-willed, determined. You can't you can't wave with every single wind that blows anywhere. You got to understand the reason and why you're buying a particular stock or company and stick with it and not let Bob, Tim, and Sally tell you every other which way why that's bad or good or this way and convince you just to go with them whichever way. You've got to have your own thought in it.
Yeah, but this gentleman said that to me, he called me a character. I think it's a compliment.
You are a character, Brandon. I'll give you that because bonds are dead.
Yes, they still are. It's sad. With that being said, listen, he was like, he was like, well, some of these institutions, they fail because other institutions have taken them over and they've gotten even bigger. And I'm like, great, they still struggle to make 10%. That's it. And then he was like, well, 10% for $1 trillion fund, that's a lot of money, right? Well, yeah, it's a lot of money, but it's not a great percentage. And quite frankly, I hope they control a lot of money. I hope they do. I want them to control more money because when they make these mistakes, they'll create bigger opportunities.
And Brandon, you almost cleared 10% in less than 2 weeks.
Oh, yeah. And you're doubling your account. Why don't we run these funds, Dave? We need to start a fund. We would do so much better than everybody else.
I feel that way, but then I don't know.
Yeah, but you have to select your customers, though. Like, you have to be very selective about your customers. I feel like I'm being a little harsh on these funds because probably the emotional maturity of their customers, I shouldn't say that. Their experience level of their customers is probably very small, and they don't really understand what it takes to make money in the stock market. So if they're not instantly getting that gratification of money coming in, then they take their funds somewhere else. Last year, in 2020, the average return for hedge funds was 12.3%. Mutual funds for large cap stocks, 13.76%. So a little bit better for mutual funds.
Almost as much as their fees.
Yeah, right. Now, I will say there's some big funds that are good. I like Oak Tree, for example. I like Oak Tree Capital Management. They're good.
What about ARK? That's one that's always in the headlines right now. ARK Investment.
I will decline to comment.
I know our mutual friend Greg is a big supporter of ARK Innovation Fund.
It's too popular for my taste.
Really?
Yeah. And for that reason and that reason only, I think Cathie Wood is very intelligent. She's got her finger on the pulse of what will be next, right? But those industries that she's getting into are, I mean, they're inherently more risky, but a large majority of those stocks just simply won't exist in 10 years.
Whoa, really?
Yeah.
Like, do you have a couple in mind that you think, or a sector, or
no.
a group, or are you saying like how the EV market is right now, how there's coming out with a new EV company every other month, and in 10 years, most of them are going to be gone, and it's just going to be the 3 or 4 major ones.
Every new EV company from here on out should be required to name their company not Tesla.
Look, man, I like Elon Musk too, but there are a couple of good ones.
Look at the one company that just Lordstown Motors here in Ohio.
Oh yeah, they had the big news about the corruption.
Yeah, and then they just came out and said that there's I shouldn't say large, but there's concern that they may not be able to have the capital to go forward. They may go bankrupt soon. I don't see Lucid Motors competing with Honda or Ford or Tesla even, or anybody on that scale.
Do you see Lucid Motors lasting? Do you see them?
They might, but anytime you have a new industry come into market, which I consider EV a new industry, it's outside of the traditional automotive industry. It's priced differently.
I'm going to disagree with you on this point. I'm going to interrupt you and disagree with you. And here's why. It's because Ford and GE and BMW and all the companies that have been around forever are building their own EV lines. So instead of buying up a Lucid Motors, like you typically see happen when a new, well, I guess you could say industry, but a new type of a branch of that industry happens, typically you see the big companies buy up all these new ones. Ford and GE is like, no, we're not going to buy them. We're just going to outsell them, and we're going to create our own line.
I think that's all they can do. I don't think they have the margins to go out on shopping sprees.
Really?
Yeah, Ford and those old school automotive companies, they've never operated on large gross margin.
What about Toyota?
Maybe. I don't know. I don't have the numbers in front of me.
Well, see, here's the thing with
from experience.
with a lot of the Asian car companies is that they don't have unions, and so they don't have to pay those retirement benefits later on afterwards.
Right.
They make more money. They have a higher margin return on their cars because of that.
Well, yeah.
So it looks like they're selling a cheaper car, but they're not really selling a cheaper car. They have higher margins, so they can sell it at a lower price and beat out the GEs and Fords.
Right. Well, I think the market is considering these EV companies sort of a new industry because the price to earnings ratio, for example, of these new industries, I don't think Ford or GM's ever going to get there again. As far as the price to earnings ratio goes, they're not going to be valued like that. They're being valued totally differently. And it is a new disrupting technology. I mean, there's some companies that are trying out hydrogen rather than electric. And
hydrogen's been around a while with BMW. BMW had a hydrogen car way back in 2000.
Really?
Yes.
I did not know that. I did not know. I'm doing my Johnny Carson.
Yeah, it just never took on because there wasn't enough people buying them. They were very expensive at that time. It was six figures for a car, and that was 20 years ago. So I mean, it was very expensive to get that car, and you had to really believe in the product in order to do it. But BMW's been ahead of the game as far as hydrogen cars go.
Usually, once a new industry or disrupting technology matures, a large amount of the companies that were in it at the beginning no longer exist towards the end. They go bankrupt. Even if the technology is, something that's going to be built upon for the future, that drives the future, a lot of those companies just don't thrive.
So as far as let's bring this back into how do we make money off of this? What do you do when you see a whole new industry here? Do you put your money all in one of these big companies, i.e. a Tesla, or do you try to do a fund like an ARC Innovation Fund, like we just mentioned, that started this whole conversation?
The safest way to do it may be ARC, but you have to look, and I don't have what they're doing in front of me, but I don't have their holdings in front of me, and you need to look at their holdings and what percentage is in what company.
So you're going to go the fun route rather than try and pick a winner.
I would think that's the safest way of going. It's still, I'm one of the people that is looking at it. I have to see something that jumps out at me that proves to me somebody's going to survive, and oftentimes that doesn't happen until after the fact.
Gotcha.
Which is fine. Okay, you could still. Apple stock in 2009, there was a lot of uncertainty around that, and the new iPhone and all that. But you can still buy Apple today in 2021 and do really well on it. Tesla could still be a growth company in 10 years from now, even after it's proved itself, just like Amazon is.
Yeah. All right, good points. What do you got next for us, man?
Robinhood is offering its second IPO to users of the app. This IPO is Clear Secure Inc. The first IPO was FIGS, F-I-G-S, and that went over pretty well. Were you going to say something? Okay, so let's pull up FIGS here. So FIGS, since the IPO, it's went up 53.57%. So got in on that, you're doing pretty good. There's some terms to the Robinhood IPO. So Clear Secure Inc., it's the ticker symbol YOU. Now you're not going to see this if you're on Fidelity or TD Ameritrade. You're only going to find this on Robinhood right now. Clear Secure Inc., the IPO is estimated to go between $27 and $30 a share. Now, you go to YOU, ticker symbol YOU, and the way to do this is you would hit request shares at the bottom right-hand corner of your screen, and then what it's going to do is it's going to put a limit order in for you, and it's going to do 20% above the maximum estimated IPO price. You put in the number of shares that you want, which it would charge you $36 a share for, and then you review, and then you submit, and then you wait and see if you get accepted for these shares, if they actually get sent to your account or not. And then once it happens, if you get accepted, once they declare the final IPO price, then you have the option to accept the order and pay for the shares or decline the order. So even though you're putting in a limit order right away, that doesn't mean that you have to buy them. You know, because the IPO could come in higher than what you want it to, and you might want to reject the order. Now, the caveat to it is that you can't sell this stock within 30 days. Because they call that flipping. It's Robinhood's flipping order. I mean, you can sell it. Let me rephrase that. You can sell the stock, but if you do, they will ban you from buying IPOs for the next 60 days.
All right, just listening to you explain this, I don't believe Robinhood understands its user base. Does Robinhood understand who its user base is?
Do you think people are going to load up on this just because it's available when it's an IPO?
Yes, but I mean, all these rules and ways to do it, and you have to hold it this long and this way, and if you read paragraph 5, article B, and agree to this, I mean, like, your user base blew up because you had buy or sell buttons at the bottom. That's your user base.
Woo, confetti, because I bought it.
I mean, like, come on. Understand who your demographic is. And then you come out with an overly complicated way to get involved in the IPO. Yes, there's going to be a big group of people following it. Yes, zero will probably jump because of it right off the belt. Right away, the price will, they'll say $30, but then it's going to go to 35 the day before and 40 the day of for the actual IPO price, but then it's going to drop right away because they're all going to sell.
We know the Robinhood user base, okay? I quote them a lot on this show with the craziest things I read on StockTwits this week.
I'm telling you, man. Like, seriously, I don't know, man. This could, yes, it's gonna blow up because the Robinhood user base wants to be in the IPO. They want to be on the latest greatest thing. A lot of them have FOMO, and they're yelling YOLO as they buy their stocks and get their options. But I don't know. To me, I'm not in. I'm not a buyer. I'm not joining this, and I want to talk more about the company, Clear Secure. Do I believe that they deserve a $4.34 billion valuation at the amount of shares that they're given? I don't know, man.
They have great potential as a company. Now, Figs, it's interesting to me because Figs is actually kind of fairly valued. It's not my kind of stock. It's an apparel stock. Okay, I don't know if I said that right. It's an apparel stock. So it's not my kind of thing. Apparel stocks, they often end up being fads that, come and go but PE ratio on Figs is only 15.89. However, Clear Secure, there is no price to earnings ratio because they're not making a profit right now. That doesn't mean that they won't. I mean, they're in 38 airports right now. Let me get into this real quick. Cause
have you ever been in a TSA check line that had one of them come at you trying to sell their service?
No, because this is new. I haven't been out of the country in 6 years. I don't think.
I mean, honestly, they do more than just that. But all right. So the people who are going to use these type of service are business travelers, right?
Mm-hmm.
Business travelers are going to use it. Those are the ones who really want to use this the most. The everyday commercial travelers, there's now going to be a different class separation. There's going to be upper middle class and upper class, and they're going to travel by a private jet. You just had yet another private jet company enter the market with routes all over the United States at very cheap rates. You could fly a private jet cheaper than you can first class on Delta. Why would I fly with Delta first class if I could just get my own jet and not have to be around anybody?
Right.
You understand? The prices have gone that low now on private jets that this Clear thing is only going to work for business travelers because nobody else, either you don't have enough extra money to pay for it all the time, or if you do, you're flying private jets now.
So you mentioned the market cap, and it looks like it's going to be valued around potentially $4.34 billion, maybe higher. we don't want to really look at last year because we know what happened to travel last year and it was nobody's fault. Okay.
True. I'll give you that. Yes.
But in 2019, the company recorded a net loss of $10.8 million on a revenue of $230.8 million. And then, yeah, so I don't...
it's not a...
Actually, I'm sorry, that was last year. So I'm going to say this again. Last year, the company recorded a net loss of $10.8 million on a revenue of $230.8 million. Then in 2019, it was a loss of $54.2 million on a revenue of $192.3 million. So nowhere in those numbers does $4.34 billion add up to me.
It doesn't add up, man. I'm not a buyer of it. There will be a lot of Robinhood people who buy into this, but if your question is I mean, there will be the Robinhood people who buy into it. They're going to sell right away at the when it IPOs. It's going to drop right out the gate.
Yeah.
So that's what I feel about this particular company. But if you're talking about the Robinhood IPO program in general, I mean, because I think, do you agree with me about Clear?
Yeah, I don't like it.
It's overvalued.
Yeah, I think people are going to sell it right away.
Yeah, so we're in agreement. So when it comes to the Robinhood IPO program, I think this is great for retail investors. I think there's too many rules, though. They're going to lose interest quick unless Robinhood streamlines it.
I mean, they do have some interesting technology here, though. Okay, they can actually determine who you are by your iris or your facial scan. This isn't, to be fair to them, it's not only used in airports, it's used in venues. The Los Angeles Football Club, the Detroit Tigers, Little Caesars Arena for the Detroit Pistons.
I remember this. Tom Cruise used it in Minority Report.
Did he? Oh, you got me. You got me. I've never seen Minority Report.
Really?
No. The U.S. Department of Homeland Security also gave Clear Secure's Information Security Program its highest anti-terrorism technology certification. As I mentioned, they're in 38 airports, 26 sports and entertainment venues, 61 million total cumulative platform users. There's people that subscribe to their services. So, I mean, the company does potentially have a great future. It's just that valuation right out of the gate. It's eye-popping to me.
What else you got, Brandon?
That's what I got. That's all I got.
All right. Cool. So I've been Debbie Downer this whole show so far. Like, no, I'm not buying that. No, that's overvalued. Let me talk about a company I like. Huh?
Okay. I hate it. I'm just kidding.
Nice. Love it. All right. This one is KULR. KULR. I'm just going to say KULR just because that sounds not really cool. KULR Technology. This one was thrown at me by a friend of mine earlier this week, and I didn't know much about this. This wasn't on my radar at all, and he brought it to my attention. I started doing some research. Let me read off a few statistics. Dun-dun-dun-dun. This one recently received a permit from, so KULR Technology, what they do is they work in and around batteries, right? Lithium-ion batteries. Everything's going to be electronic right now because that's the way our current government would like it to be. They want to move away from the non-renewable resources and into more renewable resources, and batteries seems to be the way to go. So KULR Technology is not reinventing the wheels, so they're not trying to make a new battery, but they are sort of trying to make a new battery. What they're doing is they're trying to make those rims spin instead of trying to make the wheel all over again. They're trying to make the rims last longer, if you want to stay with that analogy.
Right, it don't stop. Sorry, 3-6 Mafia.
So they recently received a special permit from the Department of Transportation for transporting lithium-ion and metal batteries for recycling. On June 7th, they did a small stock offering, but only to one institutional investor. The gross proceeds were only $6.5 million. Let me use that as $6.5 million. Doesn't sound like a lot for a company, guys, but this is a startup company. They've only been around a few years. I see high potential in this because of its lithium-ion battery, position. They recently are working with NASA to create a 3D printed battery for space and something you could create in space. They already have an agreement in there they're working on. Another agreement they had in October 6, 2020, they have partnered with Airbus to provide battery safety solutions for airline batteries. What you're seeing here, guys, this is a trend, Brandon. Mm-hmm. They are signing contracts and partnering to create innovative items with major players in all kinds of realms of business, and they're looking to make batteries better, safer, longer, stronger. And it's like BASF. We don't make all the products in your house. We just make them better. This is what it's doing. This is what KULR Technologies are doing for lithium-ion batteries. I really like this. Its 52-week high was at $3.19 just a few days, 1 week ago. Its 52-week low was at 74 cents on August 10th of last year. There's not a lot of volume on it. Usually, last couple weeks, there has been a lot of volume. This is not one that I would say you're gonna day trade or swing trade. This is an investment, but I will like it as an investment. Your thoughts?
Let me ask you this question, because I rarely ever go into stocks that are below $5 a share. When you're doing that, is it your goal to get in when volume is low in anticipation of the volume increasing? Which I think that's an obvious question, because of course if the buying picks up, the volume is going to increase. But I'm trying to make a comparison here, because when you're buying a call on a stock, for example, a call option, oftentimes you're buying it when the stock is moving sideways, just going in between its resistance and support, and it's narrow, and you're just waiting for the breakout. You're waiting for that volume to pump up. Is it the same way when you're buying a penny stock? Is it better to look for that low volume figure? Is that something you look for?
If you're looking for a day trade or a swing trade, you want high volume penny stocks. You want something that you can move your money in and out of very quickly and get out. With this one, I'm looking for is a long-term investment. What I'm seeing is a company that is on the verge of creating a lot of commercial value in their products and their partnerships. And so they're close to breaking out.
Right.
Is what I'm saying.
So you'd be looking for the high volume if you're going to momentum trade a stock like that. But if you're looking for something that's going to break out that's that low, and even probably that's better.
I'm saying this is like MVIS at $2 a share.
Okay.
All right.
Sure.
I'm saying this has some future ahead of it. I don't know if it's going to be worth billions and billions of dollars and $20 a share. But I'm saying you can make a good return by putting your money in, investing it, and leaving it for a little lengthy period of time here.
Okay. So, I mean, what I said might have sounded ignorant to the subject, and that's mostly because it is, because I hardly ever buy stocks below $5 a share. So I was just trying to
penny stocks are not your thing.
And I also rarely ever pay attention to volume unless I'm buying like something that's over the counter and I want to make sure there's enough liquidity in it. But
and I wanted to highlight the volume because some people do look for high volume stocks so they can move in and out and just play the 10% rise this day, 10% rise that day, and the pops and drops.
Yeah.
And I'm like, if you're trying to play the pops and drops in this, it's going to be harder because its typical volume is only about 400,000 or 500,000 shares a day, and so you're not going to be able to play the pops and drops that easy.
Gotcha.
Yeah, this one I think is a buy for a long-term investment. Put your money in, let it sit, walk away. If your name is Tristan Huff, this might be one for you.
Diamond Hands, Mr. Diamond Hands.
All right, what I have next, I want to talk a little bit about what is going on with the space stocks. They are all jumping up, all four of them, okay? Because there are only 4 space stocks, guys. And only one that is truly just a space stock. So what's going on, Brandon? What do you think? Do you think there's some actual this is actually sustainable? Do you think that it's not sustainable when SBCE, I can get it right eventually, jumps up the way it did percentage-wise when they announced that the FAA is giving them approval for these $250,000 seats on these space rides, Is it really worth that much? Is their margin that big that they're, it's just going to jump up in value?
I don't know what their margins are going to be, and that might be something that we have to wait for it to actually happen. But I mean, it's real news. That affects the company's operations. There's been times where...
Are you lining up to get a $250,000 seat on a space ride?
No, I wouldn't do it for $10. I'd be too afraid. Let at least 1 million people go before I do. I'm not that adventurous.
I don't know. I can't see the news right now driving it up that much because it's already jumped a lot. I called this on the show back at 22. I called it a sell at 36, 39 when it was hovering around that range. Right now it's sitting at 56.
Yeah.
It's a little up for my money, for my taste.
Last I checked on it today. I was watching it, and last I saw it was up about 40% for the day. And yeah, I think buying right here is just chasing. So do you think that we are headed down the path of irrational exuberance?
I think we see it in certain aspects right now in the market. But yes, we are headed down that path, and we should be wary of it.
So that's part of the reason why I held some of my positions this week. Because I see it too. That now all of a sudden nobody cares about inflation. Nobody cares about, the headwinds that are inevitably coming, the comparables that are going to be rough in the coming years. Nobody seems to care. It doesn't seem to matter. So for some of these stocks, you could do what I'm doing and hold until they become overvalued, because I think the ones that I have right now are still a little undervalued, and I believe I'll get a much better price. Now, if you want to ring the register on these great gains, then by all means do it, and I'm happy with that. I trimmed. I do think you should take some cash off the table, but we may be heading into that Goldilocks rally that everybody talks about, and it doesn't end well. It never does. But it'll be fun in the meantime.
Yes, it will. Yes, it will. But you're right. I mean, I don't know. I'm watching my space stocks. I'm calling KULR. That's my call for this week. I like it as a long-term investment, man. One last thing I wanted to mention, Brandon, was my question to leave people with is, why is oil stocks not moving at the same pace and range as the price of oil for a barrel? Why is there separation in that when they should be directly linked? Some people are saying ExxonMobil can't replace its resources when they run dry because of overregulation, bureaucracies with governments, a move towards green technologies. I mentioned the rig counts last week, and the fact that they actually have a lot of reserves still that are ready to go, that they're just not pumping out of right now, and yet the price still keeps going higher. So I can't see that as a reason. So I don't understand the reason why a company like ExxonMobil is not moving up higher at the same pace as the price of oil per barrel.
Is there something in their margins? I haven't looked at their statements or anything like that, but are they spending a lot of money? I don't think they are, because you mentioned last week about how we've got the same rig count and.
Exactly. The what I see is everything should be moving accordingly. I see people are just not putting money into these, and you're going to end up with a Altria model where Altria in the 90s, it quit rising as much as it did because, cigarettes were bad. People started to realize that finally. And Altria just kept paying out this dividend, and then they kept going ahead and stock splitting. And you could have made a lot of money from the 90s on just putting your money in Altria and let it sit. And it was just a silent little gainer in stocks and something safe to put your money in. I think ExxonMobil might be headed that way, might not, because we're decades away from getting rid of oil.
I love the comparisons you make. You could see the experience I could see the experience coming out of you, that you remember something like Altria from the 90s. You're like an encyclopedia of stock events.
I am ancient, yes. Anyway, that's just a thought I want to put out there. You know, so people think about that. Try to ask the question: why is that happening? What's going on? Is there an opportunity to buy ExxonMobil on the cheap? Is there not, or is there real underlying reasons, like Brandon's questioning? Like maybe there is something wrong with the margins, and we're just not. I'm missing it. You know,
this is where you start. This is what starts your research. You ask these questions, you find something that seems like it could possibly potentially be undervalued, and then you figure out if it is. And if it is, you get into it.
There you go. Exactly. We couldn't. I don't think we can end it on a clearer note there today. Do you have any stock twits quotes this week?
I actually don't. I could read you the argument I had with that guy, but
no, we're good. All right, final thoughts.
I may have told him that he needed to take a break from stock twits to clear his mind from the bender he's clearly been on.
Oh man. Final thoughts, Brandon.
Yeah, just we've talked about this numerous times. Early in the show especially, we said that you need to pay attention to the narratives and see if they make any sense, you know? I mean, when we first started the show, everybody was saying tech was dead. Tech was dead. And look at the interest rates. You know, they're at 1.7%. Oh, they're so high. They weren't really that high, and they were coming back down, and we told you to buy tech. We told you to go into the QQQ when it was 10% down and buy the good companies that are in that. And it worked, right? Because the narrative didn't really make any sense. You have to question what you're reading and what you're watching. And if it makes sense, then that's fine. But if it doesn't make any sense, you do that zig when they zag. Okay? Because if what they're saying, if they're selling off these stocks and the reason that they're selling off the stocks doesn't make any sense, it's your time to buy.
Yep. 100% agree.
And the Arcajo situation was amazing. Man, if I had my own magazine, I would make Bill Huang Man of the Year. Thank you, buddy. I know you went bankrupt. I know life sucks for you, but you made me happy.
There you go, man. There you go.
How else? Like, dude, you made banks cover their shorts by selling Apple and Google and Baidu and Alibaba. It was like Christmas to me.
Everybody loves it when the banks have to eat crow.
Yeah, it was awesome.
All right, guys, my call for tonight was KULR. KULR, KULR Technology. That is my call. I'm always watching the space stocks. I'm a big rooter for SpaceX. And question oil, what's going on there? That's what I want to leave you with, guys. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night, guys.
Have a good night. Hey, wait, one more thing, and we'll say good night. Tomorrow, me and my nephew, we're starting a new podcast. It's going to be called The Highly Unprofessionals. I'm putting absolutely no work into it, and it will show.
There you go. Follow the new pod.
Have a good night.
Here's my